Good weekend all. Ira Epstein with your financial market wrap-up for this Friday, the 15th of November, 2019, just around 3:18 in the afternoon. So we're at that time frame where the market gives you the settlement price in the stock indices. It stays closed to 3:30, then reopens to 4. But this is where the market's going to settle, and what a phenomenal all-time records that we're going for. In the cash Dow, I know we got over the 28,000 level because I was watching people with hats on their head and so on as the trade was doing that. But it's been a week where we've seen 2 impeachment hearings. We're going to have a series of them next week, and then we're going to get to a vote very soon on the impeachment question in the House. And it probably gets impeachment, and then it moves on to the Senate. I think we're expecting that. More important, the market is seeing all this, and it's not breaking on the news. Now, what does that mean? So far, it means, I think, in the parlance of markets, that it's not seeing anything yet in these hearings to derail traders. They aren't scared yet. They're watching the markets move higher. A lot of people have moved out of interest rate funds. I was reading that. In September, $4 billion went into funds that primarily deal with interest rates, Treasuries. And for the first 2 weeks of November, I was just reading, I think it was a Lipper study, they said $3 billion's come out of the market. So where's that money going? It's either on the sidelines and it's not in, or it's chasing the market. It's one of the two. It's going somewhere. When we take a look at this week's video, in other words, the end of it, we're going to first deal with one monthly chart, and then after this, everything else is going to be weeklies, because what I try to do on Friday is give you the bit of a longer term on the market, and Monday through Thursday, I'm doing the daily charts. So as you look at this, can you argue that you're not in a bull market? I think it's pretty difficult. The market did that as it crossed right over here, got over the 18-month moving average, and it hasn't looked back since that's occurred. You had one challenge of it, and if we take a look, we can see that this challenge happened in May of this year. The market got down and finished at 27.5250 against this 18-week average. It then cleared it, and since then, as you can see, it's just taken itself off another 400 points. So this market is longer term, still very much in an uptrend. When you come to the weekly area chart of just closing prices, sometimes I like to see that rather than the bar chart. Same thing. You've gone from 28.55 and a half, all the way up here to 31.1775. Just a phenomenal run, and obviously the hardest thing for traders to do is get involved and sit. That's the hardest thing. That's why you sometimes use these, even the micro contracts, because you can handle risk in them. But look at how this market is just moving out on traders. It's not giving them a pullback where you get a lower and low week. From this week, you've had 1, 2, 3, 4, 5, 6 weeks in a row of each week does not take out the previous week's low. That's what you call a heck of a bull run. When you put this into the swing lines, you can see when you put them on the chart, the pattern that develops. You've got higher lows, higher highs. That's the definition of an uptrend. Now, in a perfect world, that trend would not be over until you get back under 28.55. That would break the pattern of higher high, higher lows. In terms of where the market's at in relation to key moving averages? Well, it depends what you consider key. I like to look at the 200-week when you get big moves in the market and see where the market's at in relation to it. Then I look at the 100-week, then I look at the 18. Now, in a true bull market, the shortest term average, the 18-week, is over the 100, the 100's over the 200. You certainly have that. And if you look back, once you cleared this area here, you just kept moving on. Now you had this one move up to 30.23 and then about a 180-point correction or so, and you've just moved away since then. Where's the resistance? You're riding it right now. This market is riding, that's what I call riding. It's staying on the upper Bollinger Band. It's not getting up and running away from it, if you notice. That number's, you finished at 31.1775. That's over it this week. Last week you finished at 30.9190. Literally just over it that week too, but not here. So I count each successive week over a Bollinger Band. I give it and I subtract one of the 5 percentage point times that the market will be over or under. So this market now, it's 2 weeks in a row over, so I give the market next week a 97% chance of staying under that band. But you got to remember, the band's going to move a bit higher than it's at right now. And that's because of how the math is done on it and the algorithm. Still very bullish, but could get a correction stepping in at any point. The seasonals are very bullish in this market too. You've got the momentum up, is measured by the slow stochastics, the bias up since you're over the 18-week, and the swing line up. You are in a resistance area. Resistance doesn't mean a top. You're in a resistance area. Same thing's going on in the NASDAQ. You're riding the band. You get over, you get under it, and that's to be expected in a bull market. Higher lows, higher highs. It's not even giving traders, again, like the S&Ps, a pullback to buy on yet. When we come to the Dow, you did get an opportunity here. This market paused this week. In fact, these couple of weeks, right against the 18-week average of closes. Once you cleared 27,088, you put back in the pattern of higher lows, higher highs, and you're giving a target potential. Doesn't mean it has to go there, of the upper Bollinger Band. Market starts coming in on it, and you can see where you're at finishing it out now. You just got up to it for the first time. So I think some pros took some money off the table. That doesn't mean the market can't go higher, but that gives them buying power on pullbacks. When you look at the Russell, you went from this break low all the way to the upper band and you backed off. All it is you get to these bands, and I think the pros play with them. That is not a contra-trend trade. I want to make something clear. You buy this, for example, and you think, oh, it's going to take off, and then it comes down, and where's your stop? I want to be with the trend of the market. I realize that if the market's falling, a support zone. If it goes up, a resistance zone. But that is not a contra-trend trade zone. When you come to the VIX, it is still slipping its way down. You buried it in downside momentum. The bias is down. The trend is down. This is called riding the band. Notice you're not settling outside of it. So traders, are they buying insurance? The answer is no. The market's slipping away on it. As we come to the 10-year notes, you have a pattern of a higher high and a lower low. I don't call that a trend. Overall, I can see, I'm not blind, the big break that the market had. I see a resistance point, but I don't see a chart pattern. I have a pattern of a higher high. I have a lower low. I have momentum pointing down, the bias down. I'll look for resistance at 129.21, but are you really going to risk all the way back up over that high to go short in a market that doesn't have a pattern? That's up to you. In TLT, I have a bearish pattern. I've got the pattern of lower highs, lower lows. At least I know where my resistance is. Now, if we come here, this week, and this was the week of November 1st, not a long time ago, you had a week where the market had an outside week up. One of my theories is if you take out the low of an outside week up, like you did there, you have a market that's now taking itself and giving a projection of wherever the lower Bollinger Band is. Resistance right through here. I wouldn't want to see the market take out that week's high, but barring that, I'm still looking for lower prices as a trader. In the dollar index, is this a rollover happening in the market? We're finishing around 97.86.5. That is under the 97.88. Now, if the market stays like this, and it's not 4 o'clock yet, but I think it's in the zone. Lower highs, lower lows. Is the market starting to roll? If it does, wherever this Bollinger Band is, comes into play. The momentum has flattened out. So what we had here is momentum pointed down. It then reversed itself, went to neutral. In that, the market's been hanging like that. Is it going to turn down again? If it does, then it tells me my first zone here. Second zone could be the 95 level. What would turn against me on the chart? You'd have to get all the way over this high to break the bearish pattern of lower highs, lower lows. But you can neutralize the downtrend if you just close and stay over that 18-week average. In the eurocurrency, are we going to get a flip-flop or not? Well, right now, all you have is a pattern of higher lows, higher highs. That's bullish. But the bias is down because you're under the 18-week average, which is the red line, and momentum is still slightly pointing down. So I call this chart very mixed, no clear picture. In the Mexican peso, you came back down, Let's go to last week first. The market's been fighting at the 100-week average. Momentum up, trend up. If this gives ground, then the 18-week average becomes the next support. The market falls down this week, hits that number, finishes itself out at 51.85. 51.23 was the 18-week average, and it manages this week to get not only back over the 100-week, but it settles over it. That means if you can clear, in my opinion, this high right through here, the 52.10 area, why not the upper Bollinger Band? So I think the bulls had a test of their resolve, and they won that resolve. Canadian dollar, I don't see a trend. I see a pattern of a higher high, a lower low, don't know what to do with it. That's just a fair answer to it. The bias is down, momentum is down, but I don't have a trend. I have two areas of strong resistance, the 100-week average and the upper Bollinger Band. Wouldn't know where to go with it from there. Japanese yen. This pattern is what I call an ugly chart pattern, and I realize some of you are laughing at it, but you know I talk about that during the daily charts. And you had that from this setup right here. Here you go with an outside week up, just like we were talking on one of the other charts. If you take that out, you catch a group of people. My theory, doesn't mean I'm right, my theory is when that occurs, the closest of a key moving average or a Bollinger Band, since I'm already under the 18-week average, is a target. The market starts working itself down, hits the target. That's last week. I think that the first challenge of a Bollinger Band is an area that the pros take some money off the table. And that's all that I see going on. I want to see a pattern develop that's tradable, and I don't see it yet on that chart. In Bitcoin, you have a lower low, higher high. That's not a trend. You have the downside bias and flat momentum. Support, the 100-week average in green, down to the lower Bollinger Band. Resistance, 95.02, the 18-week average. In the differential between Brent and crude oil, as you see the market's dropping right through here and coming up. Now, I just started writing my Sunday night update, and I just did a study in that where I'm pointing out to traders how the rig counts have gone down 4 weeks in a row, yet oil production is up. Know why? It's called technology. If you take a rig out and you're drilling, the newer rigs are much better than the older ones, and how you drill and what you're doing, you get as much oil production out of smaller rigs. You don't believe me? If you get my written updates, I show you what it is right now, the daily production you're getting with so much more in the way of rigs reduced. I think we've lost something like, if I'm right, 22% of the rigs this year. When we look at the Brent, we have a lower low, higher high pattern, and you're caught in narrowing Bollinger Bands. Now, that's a pattern that doesn't have a trend. You're just sort of drifting around right here. I see momentum up, bias up, but again, no trend that I can make out of that. WTI is different. It's been in an uptrend. You've had the higher lows, the higher highs. I see resistance starting right at the upper Bollinger Band at 58.32. This week's high is 57.97 up to the 100-week. But the trend up. So I think support comes in at the 18-week average, and you'd have to go back under 52.39 to do any serious damage. More important, whenever you get this narrowing in, I want you to think of a pipe and you put a spring in it and you're winding it and you're winding. It's pressure of price building in there, something generally good, and a trend comes out. I don't know if it's up or down. When we come to gasoline, all that you've done from back here, and that's August, is you've, on the weekly, the longer term charts, you've rallied a couple of times up to the 18-week average and found resistance there. It is not broken out to the upside. In fact, you get a downtrend that starts if the market takes out last week's low at 158.80. Let me just check that. I think it's 158.85. And to keep the trend going, you got to get over this 18-week average if you're going to get an uptrend out of it, and you haven't been able to do it. In fact, you haven't been able to do it since July. That's quite a ways off. Heating oil. We're in the cold weather. Where's the demand? Well, you can see the line in the sand, as I like to call it, that 18-week average. It's so important. It sets up filters and other parts. You've been fighting against this now since September, all of this time. Which way is the question. We finished the week out at 195.01, which is certainly over the 18-week average, but you still got the lower highs, lower low pattern, and flat momentum. Market hasn't made up its mind which way to break out. So you put it all together, you try to come up with game plans, and you can see the stock market, reopened now, hasn't given up too much. I want to remind you how I start you off in the mornings, my subscriber video. Now, let me explain what I do. Early in the morning, and when I tell you early, I'm up 4:30 or so, I'm already reading, and by 5:15, I have an idea what's going on in Asia, pretty good one, an idea of European market data that's come out, and I know what's coming out in the morning in America in major reports. My idea then is starting at about 5:30 to 6 in the morning, I start recording a video, and it's going to have all my trade ideas. So I'm looking at current action. The reason I do it then is the futures markets, as people wake up, they start picking up the volume around 7:30 in the morning. Watch, you'll see what I'm saying to you. And as that starts picking up, I want you to be able to have, well before that, my ideas of points of entry, exit, profit objectives. Some of the trades are going to be short-term. Some are going to be longer-term trades. They're going to be a little bit of everything, but I'm going to be specific as can be in them. And the idea there is to help you with your own trade confidence. I'm going to cover all these markets. The tape is typically 20 minutes long. You don't have to watch the whole thing. Let's assume you were just interested in the metals. There's a slide bar if you go to our website area, where this is all located, and you can slide to it. Now, let's assume you don't want to do that and you watch it on a free app that we give you. We give you for your mobile phone. It's included, a $40 a month app, free on us. And what it does is it'll play the videos, you get quotes, you get charts, everything you want. You can go to real time on it. That's up to you. It's very simple. I think it's $5-6 a month. It's no money to do that. But it's included with your subscription to my information. And the reason I do that, I want you to have the data as I put it out. I want it to be easy. Instead of you getting charged for a text message, this is a free download for you on your smartphone, and I'll use a push notification so you get it. Of course, I'm sending an email out as well telling you where it's at, and you can get into the website and you put in your user ID and away you go. The charge to see what this is all about, $7.95 for the first 30 days, no contract. You can buy a year up front if you decide to lock in a good low price, or you can go to $15 a month after the first trial introduction. The one thing I work at is trying to make things easy to understand and try to give you trading ideas. Go to our website, under the word research, you'll see the different research products we have. If you click here, it'll take you right there as well. In the meantime, I'm Ira Epstein. You have a great weekend. I will see you all come Monday. Take care now.